and welcome to this week's Closing Bell. We have a very big show because we're going to be discussing the rise of stablecoins. Murray's going to update us on one of his trades that is running up beautifully at the moment, and I'll point out a little something that I've seen that's reason to be positive. Just a word of warning, if you can hear the noise in the background, Murray's having his office upgraded. It's a brand new office, but he needed to put in another drinks cabinet. So, Muzz.
And the chipping green.
How are you going?
I'm very good, mate. How are you?
I'm very good.
Excellent.
Now, you're all pumped up about stablecoins. So do you want to tell us a little bit about what it is and where it might go?
Yeah, well, I mean, hopefully people have been reading all in the news. All I'm doing is reading the same thing, but it just appears to me that the stablecoin is that perfect meld between real world financials and the crypto sort of market. So they're not as volatile as Bitcoins. They're actually pegged. And we've got the new regulations have come in the US so that they have to be backed sort of one-to-one with like treasuries. So it's getting a bit more trust in what those stable coins are. Because I think that's a huge risk that really is still in the air with those things. Do they actually have what they say is behind
Tether, right?
Yeah. Do they actually have that behind them? And what are they actually invested in? You know, and do you pull back the curtain and all of a sudden in a dislocated market, do they just disappear because they break the buck, as they call them?
A company issues a stable coin.
Yep.
You could buy it. You get the token. They get the dollar.
They put the dollar into treasuries.
And then they put it into the US debt market.
But what if they don't?
Yes.
So what if they go and put it into stocks? You know, so they've got the regulation now to try to fix that side of things, and that would be then increasing the trust in that whole system. We've got massive growth from like Africa, third world. You can imagine if you've got a currency that's crashing day after day, what would you like to do with any money that you happen to earn? You'd want to put it into a stable coin, right? That would just make sense. Like I can put it into US dollars
and you can transfer it home
very easily. I can transfer it. I can move it. Yeah,
no fees.
Exactly. So the growth in demand from that side of things is huge. But also you can just see it. It will end up being a transactional way of moving in between those two worlds. And if I go overseas, does that mean I can have stable coins? Because do we all get killed every time we turn up to another country and they'll take 5 or 10% on the way in and another few percent on the way out? Even if you've got your credit cards, So if we can go there and have no loss, no friction at all, I'll be happy to do that if I can do that easily. So it just appears, and you can see in the numbers that the growth in this stablecoin is massive at the moment. So you've got to start thinking, okay, where's the money going to turn up?
Win?
And one of the rules on these stablecoins that they've just come out is that they can't give you interest on them. So all the money earned. Imagine what a great business. If you've got people in these stable coins and they put billions and billions of dollars in to do all their transactions, they may not leave the money there for long, but the amount that will be there will be huge. And you just put all that money into treasuries and you earn all the interest.
Well, it's like the old insurance model, right? You pay the premium, they get the money, and then they
invest in stocks, and then
they're very profitable.
They make a lot of money from that. Exactly. And so I've been looking at those different business models, and one of them that came up is this Circle that's just been just listed. And you can see it ran from $75 to nearly $300 in a straight line. And remember, this is just a daily chart. So it's only just recently listed. So this was actually, June, 5th of June. So it's only really just listed. It went absolutely ballistic. And now it's coming off the boil in what I think is a very interesting sort of way because of interest rate cuts. So apparently every 25 basis point cut, they're losing $100 million in earnings. So if interest rates really do drop rapidly, because all of their money a lot of the money is being made, even though they're trying to diversify into other, things like APIs and services and that sort of thing, but that's a very small part of their revenue. But, if all of your revenue is in that interest rate space, then of course interest rates coming off is going to affect your earnings. And I think that's why it's dropped from what...
And we had the the job numbers and the tariffs kicked in.
So the bad job numbers came in. Exactly. So the bad job numbers came in, and that was probably last Friday, right? There's 1st of August. So see, it was up at 187 and it's dropped down to 150. And that's just on the back, I think, of that change that bond yields went down. And I think people are selling it on the back of that. But from an opportunity perspective, are you now looking at this and saying, if I think stablecoins really are going to take off...
A long-term trend, yeah.
You know that the way that analysts look at things, they're always conservative. They'll say, oh, we'll sort of extrapolate the current growth, or we'll go a bit less than the current growth. And just to be realistic, we'll say, oh, it'll probably grow at this rate. But as things get adopted, it becomes a network effect, and it can then just boom.
And it's worldwide. Yeah.
And it's worldwide. So the market, how big it could end up getting and how rapidly, this could just really take off in the next few years.
Which is something, again, that we can't get to in Australia. Like, it's an international...
Yeah, exactly. They're definitely interested
market.
Yeah, exactly. So my thinking is with this, is this becoming a great opportunity if we think, even if they do lower rates, and it does affect them from that point of view, if the amount of money coming in is growing way beyond what everyone expected, who cares if you're losing a few basis points?
And of course, at some point, rates will go
back up again.
Swings and roundabouts kind of thing.
Exactly.
Yeah.
But if you think, I guess the question on this is, if you actually think stablecoins are probably going to grow faster than people expect, which I actually think could be the case, the adoption could, once it gets to a certain critical mass, could really, like the S curve, it's go and then bang, it could really take off. This might end up being a great little opportunity coming in with the fears of lowering interest rates. So I was just looking at this and thinking about this range.
Well, I know a couple of, just before you put out the range, a couple of guys I follow, Porter Stansbury, and of course James Altucher here at Fat Tail have been writing about stable coins, and they both think it's going to be huge, and it could actually start sucking deposits out of the traditional banking system. So we have to see what effect that might have as well.
Yeah, and with these guys, just to understand their revenue, how it's happening, is they do actually have to pay out quite a bit of the revenue that they get in from those interest rates to like Coinbase. Coinbase have an equity in Circle, but they sort of put together the USDC, which is the stable coin they use. They actually built it together, Coinbase and Circle, and they distribute it. Coinbase distribute it. So they've got rather than marketing the USDC, they've got a big distributing network in Coinbase, and so they've got to pay out like 60% of the revenue that they get in. So they don't just get all of that money that comes in as revenue from the treasuries. So you've got to factor that in as well, that they are actually paying quite a bit out. So maybe Coinbase is one to look at as well as it grows. But if I'm just looking at this technically and thinking, wow, we've got the sense of this massive rise going up to $300, and people would probably know I talk about these ABC structures. So, and just to point out, we've got that range, and remember I talk about the point of control, the midpoint, and we've also got the buy and sell zones. So we've got the sell zone of that range here, and we have the buy zone of the range down here. So if we're just analysing what can come next, what is the outcomes that could come from this? Where could the buying opportunities come in? So we think about the fact that it's pulled back to the point of control. You can see there. That's where the support came in initially. It then rallied up into the sell zone. That's where the selling pressure came in, exactly. Then it's fallen through and actually failed at the point of control. So now that it's failed beyond the point of control, you're expecting it to probably get down into that buy zone area. So the most bullish view of what could come next would be for it to move down into that buy zone area.
So when you say bullish, you mean you're going to get more excited the lower it goes?
The first point where it could pull up and then turn up. So a bullish case would be that it just goes down into this area and then turns up and takes off again. So it could do that. That's one aspect. So I'll be keeping an eye on that, around that $100 to $125 region, and seeing whether I get a buy signal out of there. So that's one spot where I'd be going, okay, that could be a great spot to add some. But the sort of more bearish outcome could be, let's say rates do have to drop, unemployment starts picking up, markets sell off, blah, blah, blah. That would be for it to break back below the low of the whole range since it listed. So that, of course, where do you think people have their stop losses? They'll be down below here. So there'll be a range of stop losses down below this area for people who have bought it, all up in here. So the bearish sort of case before buying it would be that it breaks that level and actually clears everyone out in a bit of a panic and then turns up. So I'd be looking at both of those going, well, I'd really want that second one to happen, but what if it doesn't? What if it just pulls back into that buy zone there and then takes off? You don't want to miss out if it does do that. So, you might even buy half on that one and then, see if it turns up and buy another half there, or, buy more on the way up if it really does turn up. But basically now you're looking at this saying, let's see how far down this can go and where it could turn up. So this has got a market cap of around 40 billion. Well, that was around here, end of July, sorry.
Which in the US markets is not that big.
I know, but it's got like nearly 2 billion revenue, and it's growing, of course.
So it'll be that classic case of looking very expensive.
Yeah, looking very expensive at the moment. And then if interest rates coming off, they're saying, I'm losing $100 million revenue. So everyone's sort of selling it off. But if that comes back to, $75, let's say, that makes it a 20 billion revenue. And you think of it growing that, it's currently growing it pretty well anyway. And you think it really starts to take off. They've got projections of $6 to $8 billion revenue coming down the pike in the next few years on growth assumptions. So all of a sudden, it's not looking too bad. All of a sudden, with you can make the numbers really work. That it's looking pretty reasonable at that price. So I think that's an interesting one to keep an eye on. The more people get fearful about interest rates dropping, the more this might sell off. But if you really believe in the whole stablecoin story, it could be setting itself up as a great little opportunity.
Yeah, just looking at the chart, there is a chance it doesn't drop at all. I mean, it could just go sideways, right? Or it could even start trending up again. We don't know for certain it's going to go down into the buy zone.
No, but it's not that far. It's 150 at the moment. And I'd say, but for me, with my structures and the way I look at it, is that now that it's failed below the point of control, the odds are that there's not much support and it probably will head down in there. So I'd expect it to actually get down there, 100 to 125, and let's just see how it trades. Because remember, that's a daily chart. Let's look at the weekly chart, and you realise just how quick it's been, right? So it's actually really strong. On the weekly chart, all it's doing is having a bit of a pullback from that initial wave higher in the first few weeks. So I'd say there'd be good support down there. I really do expect that it'll get down into that 125, 100 area and bounce would be my guess.
And the good thing with the US is they do their quarterly reports, where some of the Aussie stocks, they only do the 6-month reporting, where that one you've got a fairly short window, and we'll find out the growth rate whenever they do their next quarterly, which will be around October, I imagine. So that's going to be a really interesting one to watch. And stablecoins are going to be big. I think that's clear. And the market will like that kind of theme, I think.
Well, the growth, and actually
with Bitcoin and
for people,
Trump.
I did a bit of a chat GPT question. And for people at home, if you just want to have a quick check of that, I'll upload it to the descriptions in the YouTube version of today's talk. So if you're watching this on Fat Tail Daily, in the bottom right corner of your video, you'll see the word YouTube. You can click on that and you'll go to the YouTube version, go into the descriptions, and there'll be a link for you, which will have a little chat about this market, about stable coins, about Circle, how they get their revenue, where it's coming, what growth is expected, how much money they pay out to Coinbase, why they pay that money out, etc., etc. So there's just a little thing report there for you. Go and click on that. And while you're doing it, press like for the video to let everyone know how much you're loving the videos.
Well, talking of loving it, we were having a little look at Lynas rare earths to swip to our next topic, and that's looking absolutely beautiful. Do you want to bring up the chart there, which I can't remember when you brought it up. It was a couple of weeks ago, I think. But
well, this is
if any of the guys got on this one, they'll be happy as Larry.
We're entering. Oh, hopefully, plenty of my guys are on this. We actually had a beautiful trade in it. It was perfect for my trading model. It was couldn't be better the way it moved, and we're in a new paradigm. So when you've gone from a situation where the market is totally depressed and people aren't making money and shutting down and risk going ahead, and you've got projects that can't raise financing because they need so much investment, capital investment initially to get anything off the ground, and you've got so much risk around pricing and all that sort of thing. You move from that to a government saying, we will underwrite the price that you get and we'll give you double what the going market rate is. So you look at those two worlds, they're two totally different worlds. One is you now can get funding. You can get financials. We can say what are the numbers going to be. We're going to produce this much. What can we sell it at? Bang, we can sell it at this as a floor, which is above current market prices. And we know the government's there to take that, and they want to support us, and they're actually investing in us as well. That is a total paradigm shift. And
that's probably why you've got such a big surge there.
Yeah, exactly. That's why it's taking off. So, and we, got on this again for people learning about what we're doing, looking at the way the corrections happen. I mean, we actually bought this down at $2.15 initially and then got out up above $8 a few years ago. And then I've been waiting. You can see the long-term trend shift there, and then the long-term trend going back up here. And then you've got the start of the wave structure going to the upside. And this is a bit of a hint for you. 2 waves going back in the buy zone and then turning up. So that's when we got on. And we actually got in at about $7.30 and just above $8. Bought 2 positions just before it took off like a rocket. So the long-term trend there and recovery. So, it all just worked out beautifully. And now we've got the government on side and, helping us. But we've taken part profits now up above 10.90. And the risk now is that it has a false break of this high, just to shake new people out. So this is where everyone will be getting in a frenzy. And look, it could really take off because we are looking at a paradigm shift at the moment. But you've just always wary of, the quick shakeout and then take off sort of thing.
And we just chatted about this before. It's like it's such a long-term story. Like there's no real reason for this to fizzle out anytime soon. Like, I mean, China controls most of the rare earths. This is one of the few that's up and running outside of China. And it's not something anybody else can just switch on or, it's quite complicated.
And they want to get those new projects. And the projects take years and years and years. So you look at, Arafura or something, they're getting near to being shovel ready. They need a lot of money still. They need to get a lot of equity.
It still needs like $1 billion or something.
Oh, it's a bit, yeah. This is how much it costs to actually build, not just digging it out of the ground and sending it somewhere else to get refined, but doing it yourself. I mean, it's a massively complex process, and it's very, very difficult. So, but those sort of things are getting up and running, and things like Iluka, I think, are looking interesting, that are taking off. Again, similar structure, and they've got refinery getting set up in the next couple of years, next year or two, and they've got enough stockpile to the early 2030s, and then they've just done a deal with someone to get actually rare earths from Africa to come in and to help fill their refinery. So this one, again, easy structure to look at. This is what we're in, this years and years of everyone getting absolutely killed. But, here's your first wave and back into the buy zone there. Monthly buy pivot here and not too many hints, but here we go. So this could be heading back to that point of control there. So I'm just waiting for a bit of a shakeout on that one, and I'll be interested. But there's just things out there, isn't there? In Australia, there are a few things that are interesting, but most of the interest is offshore.
Yeah, absolutely. And speaking of offshore, Mr. Murray, I wrote about the Euro banking system this week in Factile Daily, and I just thought I'd bring this up. Do you remember the code for the chart that we were talking? We had a chart of the Euro banking system, and while you find it, I'll bring it up. So, if you've been following the market for a while, you remember a couple of years ago, the US yield curve inverted, and everybody took that as a sign that the US would go into recession. That's part of why the 2022 and early 23 markets were so difficult. Anyway, the yield curve in the US is still flat. However, it is positive in Europe, and that is, generally speaking, a good sign for growth because it means the banks can have a bigger spread. They can make more money. If they're making more money, they're making loans. And you can see here that European banks, which have been down in the dumps for years, ever since the Eurozone crisis, have started to really break out.
Haven't they ever?
Now,
wow.
I just thought I'd mention it because we hear a lot about the tariffs, and China's always problematic these days with their property and that. But that's actually a very good sign for Europe, which is a very big part of the world trade system.
God, yeah, massive.
And lots of people, and they had all their problems with Russian energy and back in 2022. So I just thought when we look around the world that that's actually a strong signal for the world markets.
Have a look at the DAX.
And that's Germany, right?
Yep. There's the German DAX. Check that
Now,
out.
oddly enough, I mean, they say that Germany's in
crazy.
recession, the actual real economy, but
Going vertical.
the old stock market's going bananas.
It's going absolutely bananas.
Now, why would that be? What would...
The massive investment in
the
defence.
military,
and,
right.
Yeah. They're opening the spigots of borrowing and
well, that's interesting you say that, Miles, because we have Europe spending big deficits. I mean, US running massive deficits. Australia's running massive deficits. All that money shows up in companies like...
liquidity is actually rising, and
so
that's
you've got to
probably
be on
lifting all boats. And
exactly.
Yeah.
So when that stops, that's when you get worried. But at the moment,
you got to go with it, haven't you?
You got to go.
It's completely bonkers, but this is the thing. Once things are rallying, like you think, oh, it's gone too far, and you hear, oh no, it's gone too far. Oh, it's rallied too far. Oh no, it's gone too far. It's like no, you got to just when things are really running. You got to, I guess, not think that you know when it's gone too far or not, or you've got
the news.
You got to try to get
telling
on.
You,
or it's fundamentally too much, or exactly, or some bad news comes out and you think, oh, it's all going to turn down. That's why I trust the charts. It's because once it's trending, like here on the monthly, like once this turned into that monthly uptrend, and you get this breakout here, and you're buying it. Once it's going, don't second guess it. Just let it go, because I know you always feel fearful when it's up here, and you're going, "Oh, I've got to get out because it's got to turn down," and then it's up here, and you're really kicking yourself. Why the hell did I get out? I didn't. The charts weren't telling me to get out. So even though it will end up turning down, you usually end up having enough time to get out. You've just got to trust it. There's the trend turn down there before the 2000 crash. So you had a year where it was sort of getting soggy, and you had time. I think, to get out. So you've just got to trust it, let it run, and not second guess it too much, because we don't know. We don't know what the future holds, really.
And I would say too that financial crises, if anything was going to bring down the markets in a big way, it would be a financial crisis, right? But if the market is happy to bid on those banking system like that, it's probability suggests that the market doesn't see a financial crisis coming out of Europe or anytime soon. So I take it as a very positive sign, which not many people would talk about or notice.
And maybe, as we've been saying, AI is now just filtering through. And as you've said before, the financials is probably the lowest hanging fruit, where you've got thousands upon thousands of employees, and you can put in some AI system somewhere and go, oh, right, we don't need 500 people on the call centre.
Well, not only the call centre. We'll have
50. We'll have 50 and we'll have 400
when
AI
the AI says,
assistants.
right, brrr, you get a loan and this is your rate. And
yeah.
I think actually there was even an article about how there's going to be like personalised pricing now for probably for everything, because it'll just scan all your details and go, you get 5%, but that guy, Belvedere, gets 7%. And it will become a very intriguing trend to watch.
Yeah,
but
it's definitely
they can use it to make more money, basically. Absolutely.
Yeah. And it's not just financials, it could be across the board. So this might be why stocks are sort of levitating beyond what you think. It is looking forward and saying in the next few years there's going to be a huge change through a lot of businesses, that their margins are going to go up, and maybe unemployment goes up as well. I
wrote about that in Fat Tail Daily too, where we could have a situation where the economy is losing jobs from AI, but companies that are harvesting
are killing it.
They're making so much money, so the stock market could boom whilst the economy.
But then retailers
looks terrible.
But some retailers are falling over, or the disposable income's going down, and some sectors of the economy would be having a bad time.
Yeah.
Whereas other ones could be absolutely killing it. Because their margins and their productivity is going way up.
Well, I think that's what's going to happen. So I think we're going to see a lot of charts go absolute bananas, but some are going to big time.
Yeah.
So
it's a stock picker's market.
It is. All right. Well, I think we can leave it there. Of course, if you enjoyed this video, give us a like. Don't forget, you can subscribe to Murray's service, who you've just been on fire lately with. I don't want to.
We're all a genius when the market's going up.
Well, no, you've got some belters lately. Credit to you, Muzz. So well done. But I'm thinking Lynas, PLS is going bananas. Even Telstra's going well for him.
It's like shooting fish in a barrel.
Absolutely, at the moment. All righty, well, we'll leave it there. Don't forget, you can leave a comment or request Murray to take a look at a chart that you want to see or anything else. So we'll do it again next week. Catch up.
See ya.